What's happening, guys? We've got another Sunday video coming at you, this time from Maine. I'm at my brother and sister's house just because I'm not allowed at mine yet. I told my buddy that I was not going to look until he was completely done. I had him renovate my house inside and out, and gave him full reign of decisions. And I haven't looked at it, haven't given much input. But when he built his house, I liked it. I liked his styles, his finish work, and all that kind of stuff. So I gave him the ability to do it, and kind of make it his own. And hopefully, when I do see it, I agree that it's good. But everybody that's driven by says it looks good. But I've told everyone not to send me any photos, so we'll see how it goes. Either way, David Worrell. Before I forget, you won the T-shirt this week. There's 3 of you, I think, that usually probably watch the videos but did not email me from last week. I put them in the video, in the scan last week. I forgot to mention it on the video. So, Boston Podcast, hopefully you guys had a chance to check that out. If you didn't, we'll have the link in the description. We walked around Boston with Lance and Greg and Zach and myself, and we did a whole bunch of discussions back and forth, and it really turned out great. It's about 70 minutes. Feedback's been great so far, so I do hope that you guys take a moment to at least check it out. And if you find any value whatsoever, again, we did it under the Traders for a Cause podcast, so the idea is that if you found value, hopefully you donate. And whether it's a small amount or a lot, doesn't matter, but every little bit counts. And as you see in the video, like Lance said, everybody always expects somebody else to kind of come in and do it, but sometimes it just starts with you. So if you found value, consider a small donation. Every little bit adds up. And for that video, we are supporting PCRF, and we hope to do a whole bunch more of these, just kind of creating awareness for different causes and that are at least near and dear to particular traders' hearts, and get behind them, support them, and provide value at the same time. Let's see, one of the things that I want to talk about this week was concentrated risk, and I think it's going to be an issue this week just because the market, I feel like the back and forth is going to calm down a little bit. I still think we're going to be volatile, but I think it's not going to be 1,000-point swings up and down where you can get away with doing a lot right now, and you can size into names and really trade 10x, 20x, 50x what you typically might. But when things tighten up, if you're too aggressive, you're going to have some issues, especially with liquidity. And the other thing that pops up, and PTON was kind of a reminder for me, when you're looking to potentially fade that name, for example. There's always that news risk on these particular names, but look at Twitter when it broke out with Elon Musk, right, with this buyout potential, and then you've got Peloton where Barron's came out with an article and says it's an attractive takeover target, right? Well, that's great, but what if that actually does happen? Are you too sized up? Do you have too much concentrated risk on one name? And that's why I like to spread across multiple. Usually I only like to size into 2, but in markets like this, I find myself starting to really margin in on, a couple names. And then you start to take a step back and say, what if? And you never want to have too much concentrated risk on, 1 or 2 different names. So what I typically do is if the market's wild, I find maybe 7 to 10 different names where I'm able to scale and deploy capital into those names and manage those positions. Most of them are going to, trend together with the market, so you're just kind of shifting basically your capital across, different equity. But if there's that one outlier move, at least you didn't have it all in that, right? And as we have these types of markets, I want to be ultra aware of that, because sometimes, you look at your size and you're like, man, what if that headline came out on this one? And it wouldn't have been good, right? So you always want to make sure that your risk is in check. And I think it's a good reminder, no matter what account size, if you're starting to go margin and it's concentrated on one name, you use margin to spread across multiple, right? If you're using it to just spread into one, not spread, just go into one, that's when you really, really open up your risk. So just be aware of that, especially when things start to tighten up. This week, I think one of the biggest things that we saw was forced liquidations, funds, redemptions, folks having to actually margin sell, get out of positions to raise capital. So things went a lot further and appeared a lot worse than maybe they actually are. I don't know. I'm not here trying to predict where the SPY is going to go, but I do believe in the short term, what happened was, on some of these names, CVNA and all these different names, SE, I feel like a lot of funds were forced into a liquidation, right? So you've got these dip buyers, dip buyers, dip buyers, then you've got this forced liquidation, and then you have all these dip buyers also stopping out, which drives the price even lower than it should have ever gone. And then when it bounces, you look at it and you're like, wow, that's a huge bounce, it should fade back. But you don't take into account, maybe that last 20 bucks was literally just one fund blowing up, and having to just take any price that they were given, right? And then as it comes back up, it's just kind of, it fixes the price, and then maybe it would have bounced anyway. So just be cautious. Not saying that everything's going to bounce this week, but just be cautious if you find yourself trying to fade something and it's acting a little bit stronger. Even though it's had a huge bounce, that doesn't matter, because sometimes things go way lower than they were supposed to, and then they just kind of start to consolidate and then carry on. So be cautious of that. And that's a reminder to myself, because I know that's how I get in trouble sometimes. Paper thin bounces. One that you saw last week was CVNA. CVNA just went straight up into circuits a couple times. It was a phenomenal trade. I sold along way too early, but got a good portion of that short on the backside. But once again, being able to flip the bias, going from the long side to the short side after it's gone up, whatever it was, 13 bucks a share or something, crazy. But that said, 13 bucks a share, we look at it, we think it's crazy. That doesn't mean that it can't go higher. So have your guard up in this market, but be aware, if you are stepping in front of a name, things are paper thin right now, and you can absolutely get steamrolled by stepping in front of stuff. So you don't have to be that person that tries to find the top. There's a lot of range on the backside of that move. So don't forget that. Cautious of the tightening range. I've already discussed this a little bit, but I do feel like we're going to tighten up a little bit. And where I've gone wrong in the past is I still try to force last week's size, this week. So for example, take AMC or GME. Huge moves. I'm able to scale in. It flushes down $7. I'm able to scale in more because I've got this such a big padding that I'm able to risk more. But I might not have that $7 or $8 or $10 padding next week. If I'm trading the same size, it's not the same risk. So I need to be super aware of that, especially AMC, where this week you could have traded whatever you felt comfortable with. There was a huge trade there, huge opportunity. But if you try to force it with different liquidity this week, that's when you can get really hurt. Kind of oversizing, kind of thinking it's going to be the same as last week. So just make sure you put the brakes on before you get too aggressive this week. And then we've got another video coming this week. I did a little podcast interview type thing with a friend in the chat, and it'll be the first one that he's done with us, and our goal is to just keep on going through our members and hopefully provide some content to you. So if you guys like it, let me know, and hopefully we'll keep on coming out with more and more and more. So I think that's about it. Everything else that we talked about the last couple weeks has been playing. One of the biggest things I think right now is, once again, it's hard for me to have a particular idea on trades right now. The way the market is, it's not the same preparation where I used to have 7 watches and prepare for 2 of those pre-market. It's not that type of market right now, because all that matters is what is the SPY doing. Are we gapping up 500 points? Are we gapping down 500 points? Are we running 1,000 points? And all these other names are going to go along with them. The Qs. You've got all the other tech names that you could be trading. You've got the volatility type names. I mean, there's just countless opportunities right now. And Caravana, CVNA, and RBLX, and what was it, AFRM, UPST. I mean, these things are going up and down 50%. So who knows where we're going to open on Monday. But what we do know is that we can sit back, relax, and make a plan in the morning, and that's really what it's about right now. So although I am watching, some names, and I'm prepared for some things, it's more about setting price alerts in the morning. Each morning on the broadcast, I go through the levels, the lines, and I set those price alerts. And a lot of times you'll be surprised, oh, I forgot about this trade. And it hits your radar because you set a price alert and it ends up being a phenomenal trade because that was the level you were waiting for. Everybody else forgot and you just got reminded. So that's the idea here. That's the goal. But again, like I said, the next part of the video will be on just my computer. Just because it's going to be a little bit hard to do that. So I will do the first part right now. As always, I'm not a financial advisor. These are not buy or sell recommendations, and this is for informational and educational purposes only. So as you guys know, I am just going through what I think is valuable information for how I would prepare and how I would get ready for the session on Monday and the week ahead. This is how I'm preparing and the trades that I would potentially take. But at the end of the day, it's for you to learn what I think makes sense for a good trade. And if you see that, then great. Then you have a potential trade. But make sure that you have your own risk, your own goals, and don't forget, you can always paper trade and get familiar with how these things work before using real money, because the last thing you want to be doing is just throwing good money after bad and trying to figure this thing out when you could be doing it for free. Risk-free paper trading, proving to yourself that you have consistency, and then dabbling in. But that's it. Let's get right into the scan. All right, guys. So for the first one is going to be VERU. This is on my main watches. It's one of those where you just kind of want to let it play out, and then once things settle down, 9:45, 10 a.m. plus, then I will start to get interested. It was the strongest small cap of Friday, so it's not something that you want to jump in front of. For those that did want to, like we talked about in the lounge or in the room, in the broadcast, throughout the day, 1070s was the level that you need to see fail to follow through. That does not mean that it goes 1068 and then ramps back through 1068 and it's confirmed. It means it peaks out 1070s, fails, peaks out 1070s, fails, peaks out 1060s, fails. And it needs to start to move away from that key level. Otherwise, you want to assume that it's always going to hold those key levels. You want to be proactively covering into that level. As always, if you are trading the front side of the move, and you know that you are not typically somebody who follows the rules or adds to a loser, then just avoid it completely until it's under that line. That's the easy way to avoid any types of disasters. But VERU should not surprise anybody. We've seen this a million times. We've seen this on this same stock a couple weeks ago. So anyway, pretty nice consolidation throughout the day. They probably just got shorts buried, and then they just kind of used the liquidity throughout the day. We'll find out real quick whether or not it wants to break out of this particular channel, and you can just draw the lines real quick, and you can see that you probably don't want to have too heavy of a bias at 1260s to 1340s. If it starts to base over 1340s, 1350s and goes, great. If it starts to peak out at 1250s, 1260s, great. Then you know that there's probably a pretty good risk reward. It could be fading under the trend. If it's under 1260s, it could be breaking out if it stays over 1340s. But if you're going to try to get a huge bias one way or the other in between these lines, there's no edge there. And the whole goal with trading is to have that edge. So make sure that you have a game plan. Make sure you stay away from just forcing a trade, just to trade. Next is CVNA. This one, nice move after hours. Pretty big move, actually. And popped up from basically 38s all the way back up to 43, 44, which is nice to see. It's been one of those where I feel like it fits that forced liquidations that we were just talking about. So, a situation where there's probably a fund or funds that had redemptions that are forced out of this position, and they just had to literally liquidate for days, and then it went way lower than it ever, potentially would have. So now when it bounces up and you see it up $5 or $10 and you're like, wow, that's too much in one day. How can it, do that? Well, consider how far it's come. So that's going to keep you out of trouble. That's where I used to get into a lot of trouble. So verbalizing it also helps me. But keep that in mind, especially, tomorrow when you see it and it's gapping up and it pulls back a quick 2. That could be a potential long opportunity if it sets up and it has good risk reward and it makes sense to you. But don't just think because it's popped up $10 that it has to pull back. It's also faded $200 some odd per share. So just keep that in the back of your mind always when you're trading these. It's a good reminder to myself because this is the type of market where if you start fighting these things, you're going to end up in a bad spot. Same thing with RBLX. You can see how tight it was. There was a couple opportunities, came back, kissed VWAP over here. So this is another good example of why VWAP is always a good thing to have on your charts. You should assume, just like key levels, you should assume that it's probably going to hold. So if you've been sizing in, like this was a great size in trade, but you want to assume that this level's going to hold. So for me, I like to size out into that level. Doesn't mean you have to get 100% out, but for me, I like to size out. And then if it stays heavy under VWAP, I can always resize back in. And more often than not, I find that I'm happier that I covered than, upset and I'm missing out. Because a lot of times in this market, they just rebound and, stay stronger than you think. So ideally in this situation like this, I would love to see this thing continue to gap up and blow through those 35 levels. And the reason for that is people will see this fast move off 20 and, 21, 22, whatever. And then, wow, it's already 35. It's got to peak out here. So then they're going to get all these folks that use this, 35 stop as this prior resistance, potentially squeeze them out and then sit back. And that's where I'd want to start to come in. I'd rather be part of the backside after things start to come in than trying to find the top. Because like we talked about, things are super, super thin. And if you don't believe me, go back and look at CVNA this week. And you can see exactly, CVNA, you can see exactly what I'm talking about intraday. And it was wild. And if you're on the wrong side of that, good luck on your account. Let me just go back. Right over here. So you can see this whole move. And it's going up, 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 up. And then it starts to go into circuit halts. That's tough. Then it goes into a circuit down. Then it goes all the way back up. Almost circuit halts again. But you can see, this double top. So you want to be cautious of something like that. Next one's going to be Peloton. This one was fantastic throughout the day, but I was wrong on it, unfortunately. And I was looking for that trade. I was looking to scale in on the short side, and it came into the VWAP. Once again, I sized down, not the whole thing, but I sized down. But it's an example of me being happy that I had sized down, because had I been fighting it, it would have been, a bigger loss. So there was a couple spots where I kind of scaled in and then trimmed back down, but I was looking for something like this. I basically had the same trade on RBLX where I was behaving and, I covered into VWAP, I covered into the pullback, and then I sized in and got a good piece right over here. And that's exactly what I was looking for, Peloton. But, the reality is it just never gave the trade. So I was ready, I was waiting, and, I had a small position on throughout the day, sized in, sized out, but it was one of those where it just never came. So, it's still a main watch next week, but it should offer some great action, considering the fact that, we're 50% plus off the low or so. Almost there. Yeah, almost 50%. And if we get another nice, $1, $2 type of move, then we are looking at a potential trade like AMC we had this week. Oops, AMC. So if you look back at the move this week, something like this, if we were to have a huge move on Peloton, I mean, we're going to have a nice dollar per share type of opportunity. So that's all I want to be prepared for. But AMC, obviously, I'll be watching, and GME, you guys saw those trades this week. AMC was a fantastic trade off of GME. And GME went straight into a circuit and then another circuit. And I actually was a little bit early on AMC, but you can see where I only put on that first entry, and then I didn't add to it until there was an exhaustion move or until there was an edge. And the edge became very, very clear after GME gapped down. So that was my cue to go ahead and size into AMC, and it ended up turning out to be a phenomenal trade. And so hopefully we continue to have good trades there, but I want to be cautious with sizing on these, because what you could get away with this week, you're not going to be able to get away with next week, in my opinion. SQQQ, always the same thoughts. Unfortunately, I traded every single day except Friday, obviously the big day. But I just didn't have a proper watch on it. And, it was very clean, very nice off the late day move. I ended up trading the SPY options instead of shorting this thing. And I traded a little bit of TQQQ, but not this one, unfortunately. But it's been a daily driver. It's been a great trader. So hopefully that maintains. ELYM. This one I've been watching all pops. I think they've got earnings next week, but I watch all pops and potential, kind of quiet unwind. This was a pump. And you always see the load and then the quiet kind of grind, and then they kind of give it to the masses. So they tried to squeeze out folks here, and then it just absolutely demolished any of the longs. So higher the better, and potential fails there, and we should continue to have a nice opportunity just because it's up on unnatural causes. Next of interest, VRM, the daily. I have a small position, nothing that I'm too crazy about. I liked how it had this big volume day, consolidated and held trend, so I'm going to be watching to see if it builds. If it builds, I will scale. If it doesn't, I will not, and I'll potentially just move right on, but I just wanted to have an eye on it. BWV was fantastic this week. I had compared this trade to, I think it was SOPA, my bad. SOPA. So I compared it to this move right over here, where, it was a liquidation play, and then it completely, kind of squeezes out and then fades off. So same deal, BWV, we had the liquidation play, comes out. The volume was the tell for me, and then each time, like we talked about, over 7, it's probably smart to go ahead and lock in. So each time it was over 7, you saw me, I was reminding everybody to lock in. I was also locking in myself. Have a small position. I will rescale if the trade starts to work, but if not, there's no reason to continue to hold it. The other one of interest is SNOA. I've just had a small position on this, nothing too crazy, but it is a liquidity trap setup. You can see the volume here. There was 60 million shares just about, and it's been holding overall trend since from the lows. Nothing to really shout about as far as the move, but if it does start to grind up, I want to be watching that as well. And last but not least, ARQQ, nice bottom bouncer. It looked like it had a little bit of a buyer in the tape throughout the day, and then late move. Nothing I'm too crazy excited about, but I definitely would watch just in case it turns into something. Just like CARV and the rest of those from last week. There's no reason to chase stuff. And I had a great, opportunity. Rather than chasing up moves, there's plenty of time. And look, if things go up and up and up and you miss them, that's okay. But don't do, the worst thing, which is just chasing because you have FOMO because you missed it and you want to be in. Because a lot of times you'll see they flush out and then you'll be selling at the lows. So make sure that you always have a game plan. Don't chase, random moves. Make sure you have, good solid thesis as to why you are trading or entering at the time you are. So that's all I got for tonight. I hope you guys have a good weekend, and we'll catch you in the room on Monday.